In this video, I'm going to go over whether we replace a machine or if we keep it. And it could be a machine. Again, it could be a building. It could be any of our assets. The way that I think about this, or I should say, I've used this concept in real life all the time, specifically as it relates to the shitty ass cars that I drive. So my car continuously used to break down, and my wife kept saying we should get a new car, we should get a new car. The repair costs are crazy. And the way that I approached, should I buy a new car or should I just continue driving the piece of shit that I own, was scenario A, if I keep the car, keep the piece of shit, and let's just say that I at the time I did not have a car payment. So the only thing that I was spending money on, let's ignore insurance and let's ignore gas, like gas mileage and all that stuff. But if we just think about the repair costs, the way that I was thinking about it is, yeah, you know what? I was paying 4,500 every time I would take the car to the shop. It was just massive headaches. And so I was paying 4,500 a year just to keep this thing going. Scenario B, I could purchase I could purchase a new car. And if I purchased a new car, maybe my annual car payment in total would be about 8,000. And so the way that I think about it is like, man, you know what? Maybe it makes sense to continue to fix the car that I currently own because I'm only paying 4,500 a year. Whereas if I buy a new car, it's going to cost me 8,000 a year. Okay. So per year, it seems like keeping the old car makes the most sense. However, if you think about it, what happens if I'm paying that 4,500 every year for the next 20 fucking years because the thing is such a piece of shit? Well, if I purchase a new car, maybe my car payment is only 4 years, right? So the total that I'm going to pay for the new car is 32,000, which is 8,000 a year times 4 years, right? Whereas if I were to pay this 4,500 over the next, let's just say 10 years to make the math that simple, right? I'm going to be paying 45,000 in total. And so maybe if we were to look at the life of the assets, maybe buying a new car makes more sense, even though the per year amount is a little bit more in the beginning. At some point, the car payment stops. Okay, so keep or replace. Managers must periodically decide whether to keep using a plant asset or replace it. That's just like our car. Compare revenues and costs of keeping the old asset versus replacing it with new assets. In my car example, we just looked at the costs. However, when we're thinking about assets within our business, some of our assets generate revenue. Okay, so again, we're going to replace if an asset in overall income increases. Keep the asset if overall income decreases with replacement. Okay, so let's look at what we've got here. So we have an existing machine. All right, the book value of that thing is $20,000. Honestly, that's probably totally irrelevant. The variable manufacturing cost per year, 50K. If we were to sell it, right? If we were to sell it, it's really not worth much at all at the end of its useful life. However, at the moment, we could sell it for 25,000. So we could get rid of this old machine and we can sell it for 25,000, okay? Or we can keep it, and we can keep it for another 5 years, okay? So financially, keeping the car, sorry, this new machine, fuck, keeping the existing machine for the next 5 years is going to cost us 250,000, right? And they're doing the math down here. 50,000 in variable annual costs times 5 years. So the total cost of keeping the machine, 250,000. Whereas we could replace the machine, and we already said if we do replace the machine, we could sell the old one for 25,000. So automatically we have a positive cash flow of 25,000 if we get rid of the old machine and buy a new one. Now, the new machine is going to cost us 100,000, and it's going to require 36,000 in variable costs per year. So it's cheaper to use per year, but we do have to pay 100,000 for it. Okay? So here's the $100,000 purchase price, and then here is the 36,000 every year for 5 years, right? I can't do that in my head, but 36,000 times 5 is 180. All right, so positive 25,000, and then $100,000 purchase price, 180,000 in total costs over the 5 years. The total cost of the total cost to replace the old machine and buy a new one is 255. So we keep the old one, we pay a little bit more each year, and then we don't get anything at the end. However, the total cost is 250. We replace it, we get some money up front, we have to spend some more on a new machine. The only thing that I think we're missing is what is the salvage value of the old machine or the new machine? Maybe at the end of 5 years, the new machine will be worth something, right? So I think we're assuming that it's zero. Anyway, hopefully I'm not dying. Sorry about that. Yeah. So anyway, the cost to replace is 5,000, right? So our cost would increase by $5,000 overall. So I think that the conclusion is that we would keep the old machine because it's less expensive to do that.